Hey all, welcome to Share Trek. This is Raj here, and today it's our weekend spotlight session with Sandeep. Hi Sandeep, welcome on board.
Great to be here. Thank you for having me on again. It feels nice to come on and talk some information, share some information about shares on Share Trek.
That's a really good allegory, I would say. Shares on Share Trek. So Sandeep, we are going to talk about CRBU Biosciences today. This was requested by a subscriber earlier, and I had said that we'll try to cover it on the weekend spotlight. So here it is for you. So let's get started. Welcome back, friends. So we have Sandeep here. The topic is CRBU. Without further delay, let me pass on the baton to Sandeep. Sandeep, take it on and run with it.
Wonderful. Thank you very much for that wonderful introduction, that great introduction there, Raj. So a lot of our viewers, our genomic viewers and so on, know the company CRBU Biosciences very well. But for those of folks who don't, it is a genomics company. However, it does things a wee bit differently. Where a lot of us are familiar with CRISPR and the CRISPR technology. However, CRBU Biosciences, it interacts it through a technology called Chardonnay technology, which, for lack of getting too technical, it's almost like a mixture of CRISPR and the RNA technology, which is really, really neat. So it's got very neat technology. It's very cool. It's well liked, but how are the financials? Can this company do well? Can it survive? Does it have enough money and income on its balance sheet to go on to when it eventually gets approval and eventually starts getting some revenue streams? So one thing that I wanted to really talk about and bring up is the cost. A lot of the times, these bioscience companies, biotech companies, they incur a massive amount of cost. But that is because the reward can be massive. The reward can be great. And we can think about this when we were considering the unfortunate COVID pandemic, where these companies like mRNA, Moderna, and Pfizer, they spent an immense sum of money, and they did get a significant increase in revenue from selling their vaccines. However, the cost was just crazy high. It's almost like a very high risk, high reward thing, because once there is approval, and that's why a lot of these medicines are quite expensive, because the cost going in to them is just insanely pricey. So it's just something to consider. High risk, high reward. Risk of spending this much for the potential of getting a very, very solid revenue stream. But how is CRBU in this way? So CRBU Biosciences just reported recently, and it feels great to say that this company has one of the most well-organized 10Q statements I've seen in a while. And if we were to expand a little bit further, the revenue is a lot better than it was in prior quarters. That reflected into their share price, which is very nice. What they did was they, unfortunately, are a money-losing company, but they lowered their loss and increased their revenue, which is really, really sweet. So one thing I'd like to do over here is, we were to take a look, first of all, when we're taking a look at fundamental analysis, we like to start with some of the cash flows, and we'd like to see that their cash flow is improving, and they do have cash on hand, enough cash to do better than their current liabilities. And this is something I really, really looked into. One of their current liabilities is deferred revenue. Deferred revenue is revenue that this company got and is currently using. However, the way it works is they have to use that revenue over time. They have to claim it over time. So it becomes a liability for accounting purposes, not necessarily for usage purposes, but for accounting purposes. I know that might sound a little bit complicated, but just think of this as not a official liability that they have to owe, but a liability for accounting reasons. So if we consider that, the current liabilities are not too bad, but what I'd like to do is take a look at why I think this company has just a beautifully organized financial statements. First of all, we for anybody who was wondering what CRISPR stands for or what Chardonnay technology stands for, there we go. CRISPR hybrid RNA DNA technology. And this is what one of the reasons why I like this company is I get the feeling that this company, Caribou Biosciences, is very honest, especially in these two paragraphs right here. So what they basically say is that this company, they are losing money. We know they're losing money. However, they say that when they achieve profitability, that is depending on when they get approval in something. And they may never achieve profitability unless they continue to raise capital, unless they fund these very, very expensive experiments and research. They might never achieve profitability, and they need the stock market. They need these marketable securities to fund their operations. But they say that when that happens, they would then be able to show revenue. But until that point, which again, they're being very honest here, that might never happen. Until that point, they're going to continue to need to raise capital. They currently have enough cash to fund, as they said, the next 12 months. And later on show that how their dilution is. They organized it very nicely, but they have enough cash right now for the next year. However, if they cannot get some approval and achieve profitability, they're going to probably need to go to the bank again, as they are being very honest over here. Another crazy good thing that I see here is they're talking about their licenses. So this company has Caribou. They have a few very, very well capitalized, very nice partners in Pfizer, in AbbVie, and this other company called Edge Animal Sciences. Don't know too much about that right now, but Edge, Pfizer, AbbVie, very, very rich, very, very nice companies. So it's good to see that they're together in a very, very nice gang of good, nice names in the bioscience industry. And the company was very honest about their dilution, as you said. And right here, you could see how much dilution they have. And they organized it by dates, which I really wish a lot of other companies would do this, because it makes fundamental analysts like us very happy. We don't have to do the, how they say, forensic accounting to figure this out. They laid it out for us very neatly right here. You can see that they issued this many shares on this date, and they issued some shares to some investors in the form of either shares or convertible notes, in this case, Pfizer, and other cases to the Edge Biosciences company, which is great. I love seeing this. I love seeing how organized it is. And I love seeing the way that they are being incredibly honest, incredibly truthful about, as you see, their assets here. So they got quite a bit of cash, and these are cash and near cash, and quite a bit of treasury bills, which is nice to see. So, company, Caribou Biosciences. It is doing well right now. I was looking at an article from the wonderful site Simply Wall Street, and it highlighted and worded this a little better than I could, where they said that the company is growing revenue greater than some of its peers. at a faster pace, but it's trading cheaper than some of its peers. It's trading cheaper on a price to sales ratio than CRISPR, than NTLA. Pacific Biosciences is doing a little bit better on the price to sales ratio. However, it's doing better than some of the big names. So it's trading kind of cheaply on that regard. And it's using its Chardonnay licensing to Pfizer, to AbbVie. However, one thing that I did read in their earnings is $17 million in common stock, which has yet to be used. A lot of that was given to Pfizer, to AbbVie, and some of their other partners, but that is an offering that is still on the table, close to $400 million. The company's got some new drugs and great drugs on the horizon to help out with leukemia, and I sincerely hope those do well, because the folks in the oncology field really could use a lot of help. However, I see that their revenue from investing is negative. Their revenue from operating is negative. Their revenue is negative. And they're just waiting for that moment, that time to get approval. And when that happens, the company's going to likely be able to do much better and generate revenue. But until that point, as they said, as the company themselves said, they're going to need to use the stock market to fund some of these research, some of this technology. And us as a shareholder, you can't just keep going to the shareholder and dilute the shareholder. It's not technically debt. However, as a shareholder, you don't like seeing that. You eventually, if you dilute the shareholder too much, shareholder will leave you. And that's something that I see with companies like AMC, the movie theater company, where they keep relying on stockholders and bringing their stock almost to zero, which is insane. You can't keep doing that. So this is a consideration. But I love how honest the company is. I love that the company is telling us outright that, hey, we're using you as a shareholder to fund our operations, but when we get a revenue stream, you might be pretty happy with us. So bear with us, and I appreciate your honesty. But Raj, what do you think about CRBU Bioscience? What do you think about what we were just talking about? Any great thoughts and thoughts about the pipeline?
No, I think they have the next generation of CRISPR editing with Chardonnay. That's my opinion. And I think it's more accurate and less, it's not prone to off-base edits like CRISPR. So all the demerits of CRISPR to a great extent are removed with Chardonnay. And that can also become a licensing revenue stream for the company as more and more companies start using it. And the share price is also going up decently. Let us quickly look at their price chart. Let me show you the price chart here. And if you can see this, I'm just going to scroll down. You can see how much beating our gene technology companies have taken. Our highs have been at 12.79 as of 15 September 2022. And now, if you go before that, these are all crazy levels at which the stock price had been. So we need to have a perspective of where we came from. So this was $31.83 on 7th of September 2021. Since then, things have moved south, as they say. We have gone south. Just let me momentarily move to another stock and come back to CRBU.
Been very, very painful for
here we are. So we have come from such high levels, like double digits, mid double digits to down here. So the stock has fallen along. But during that period of time, what has happened is equity dilution has happened, as Sandeep has mentioned. Money has been invested on creating the Chardonnay technology, on creating CB010 and CB011, the other therapies that they have. Money has been expended on scouting for big pharma partners like Pfizer and AbbVie. So a lot of work has been done, value has been added. So as they say, energy is not destroyed, but only changes form.
Well
So
said.
the value in the company is a different configuration right now. I don't think it's in any way less than what it was before. In fact, it would be more than before. But overall, post-COVID, the market tendencies and the overall high interest rate regime, and the fact that all these companies have cutting-edge technologies which have not yet been approved and which have not yet seen the marketplace and earned revenue on a consistent basis makes these shares a little dicey for the average investor. And if you
Mhm.
look at the entire scope of the market, I bet that very small percentage of the market is even looking at genomics shares. They don't
Yes.
even recognize that there's a category called as genomics shares. That's the name I use for the list of companies we have, not just sequencing companies, but also therapy and platform research companies. So the market, I don't think is looking at it that way, except for some visionaries like Kathy Woods and a few others who
Yes.
have focused on it. And those ETFs are also responding. If you look at ARCG at this point of time, right, it's also starting to respond. And
Yeah.
I'd put a cup and handle pattern here for ARCG. And we have a resistance here, which is at 28.02. So if the animal spirits persist, we are going to cross through this. So when the money is freely available, when the Fed is dovish and the interest rates are low, people are happy to take risks. People are happy to put money around different places.
Well said.
But right now, many people are busy with their own consumption and
Mhm.
meeting their basic requirements. And as I mentioned, a very small subset of people are looking at gene therapies as such. And out of them, I think there are going to be very, very few who actually have the kind of money needed to invest in these shares and keep the momentum up. So if you see, the momentum was very low until very recently when we had the benign inflation report, and then things have started getting active.
Mm.
So that's, I think, part of the story for all the companies in our watch list. I'm just going to move ourselves to the other side. So if you look at our watch list, in the last trading day on Friday, we had most of the counters positive. The only negative ones was mRNA, which we are not covering, Schrodinger, this is Thermo Fisher. So all three are not part of our regular coverage. And of course, Illumina, we know it's dogged with a lot of problems. It's put itself into a very bad situation. So coming back to Caribou, which is our subject for today, I don't see any chart patterns that I can comment about, but I can say that the momentum is looking good with more room on the RSI to go up. So further upside is possible on the price. MACD is also bullish. We have a golden cross already here. And if we could make another golden cross here, that would be great. And since last time I reviewed this share, it has converted the 200-day exponential moving average also into a support. There is nothing not to like about that. So it's all looking good. And with this move, we have actually covered this gap down, a gap up, because when we came down, we covered it. And now we are moving up in a very organized manner without any sudden movement. So this is a healthy move up, I think. So overall, I'm happy with what Caribou is doing. And I also have a few things to talk about, not few. I have one more things to talk about in Caribou, and that is going to be about its class action lawsuit. So a company, a law firm had bought a class action lawsuit on behalf of shareholders. And what they were alleging is that Caribou made wild promises, which was, probably not true. And they knew it. But Caribou filed a motion recently, I think last week, where they said that the plaintiffs have failed to prove that Caribou knowingly misleaded the market or anything. So they want the suit to be dismissed. So that's a new development out there. So I think as far as new companies like Caribou and CRISPR and all are concerned, there's a bit of education element that they have to do as pioneers in the technology. And they always have a section which says these are all forward-looking statements and all that stuff. So of all the companies in our watch list, I think Caribou is one of the best managed companies next to CRISPR Therapeutics. The CEO is a very level-headed CEO. And it's a no drama company. It does very well. It has developed a platform as well with CHRDNA. So overall, I'm positive about Caribou. This is good times going on in the market. I hope it lasts. I hope the inflation gets tamed, because the housing market is also suffering. And it could lead to a lot of very bad consequences for Canada, because a lot of mortgages will come up in 2025 and 2026 for renewal. It's almost $1 trillion worth, I believe. and then it will be a big problem. So we need the inflation to go down. We need US to become calm so that our mortgage rates and all can come under control. So it's all moving in the right direction right now.
Right.
Keeping our fingers crossed. Let's hope for the best. So that's all, my friends. Sandeep, do you want to add anything else?
Oh, yes. Company, as you said, very level-headed, but I could see that in the accounting as well, where they're so transparent, they're so honest. They say, this is what's going on. Even in terms of banking, I didn't see this as a risk, but they outlined it as a risk as well. They said, most of our money are in 2 banks, and we are above the FDIC limit for that. So if these banks were to fail, that's a risk, and that's just so honest of them. Thank you.
It could also be because the CEO is coming from academics. The CEO is from academics, and she's a protege of the Jennifer Doudna. And if she wanted, she could have been in academics, but she chose to be a CEO, get into the business side of it. And I think she's doing a great job. Not the typical fast talking elevator pitch person, I think, but more reliable. And of course, things will be difficult for her. But in the long run, I think this is going to be a solid company with a great reputation. That's my opinion.
Great.
Okay, then, Sandeep, I think we have more. Yeah, please.
Thank you to our viewers. This was really cool. I really like enjoying doing this, but if you want more, like you want this presented in a different way, please do write something in the comments and let us know. Do you want more of the ratios, which is a little hard for money losing companies? But if you do want more of the ratios, do you want more of opinions? What would you like? Just feel free to voice your opinions, and all opinions are welcome, like negative, positive, somewhere in between. Everything's welcome. So thank you, and do it up.
So with that said, I think give us the next topic and we'll be back again. And thanks, Sandeep. We'll have another session again on Monday.
Yes.
Take care. Have a great day. Bye for now.
Bye, friendos. Do it up.